How's it going, everyone? Today we're going to talk about the Federal Reserve of Atlanta. And what's crazy is that they're announcing essentially a third quarter negative growth, right? So that's very problematic. Two consecutive quarter growths or negative growths is the classic definition of a recession. So this could signify a real recession. Now with three quarters, it could go into depression, with inflation and potentially hyperinflation. So it's not looking so good. Here is the chart. This is going back from the pandemic era. 2020 Q1 to 2022 Q1, average absolute GDP. So it is not that great. Look at the GDP. It is just straight down. So it's pretty crazy. The recession is real, and maybe the depression could be real as well. So how is this gonna affect everything? Well, we don't know, but whew. So pretty interesting stuff out of the Atlanta Federal Reserve. Pretty wild. Another thing is U.S. existing homes have sunk for the seventh straight month. Check this chart out from Bloomberg. So it's kind of a carnage given that the housing market has recently exploded in the last couple of years, but with mortgage rates having soared and also home building has basically gone down. The tight market it's kind of surprising and not surprising that existing home sales were expected to fall, but 7 straight months. That's pretty wild. So existing home sales fell only 0.4 month over month in August. But that is still 7 months, consecutive 7 months of it falling. Here's a chart from Bloomberg. And this left existing home sales down still 19.87% year over year. It's pretty crazy. And we're constantly being told that, hey, buy, or at least in the last year and a half or so. It's too hot. It was definitely reminiscent of the housing bubble. But this is also the longest streak of month over month sales decline since 2007, since that housing bubble back then. So it's pretty wild. The other crazy thing is that existing home sales fell to 4.8 million, the lowest since the 2007-2008 crash. Here's a chart, another chart from Bloomberg. So as you can tell, this goes dating back all the way to 2007. It has not been that low since 2007, the existing home sales. So it's pretty wild. And these are based on closings that are likely, that have likely occurred just this past July. Despite the declining sales, they're not seeing any increase in inventory. So inventory apparently will remain tight in the coming months, maybe even for the next couple of years. This is NIR's chief economist. So some people are saying that homeowners are unwilling to trade up or trade down. They locked in those historically low interest mortgage rates from before, and essentially there needs to be more construction of new homes to boost supply. Now, the median sale price did rise 7.7 from a year earlier to 389,500. This annual increase was the smallest since 2020 in June. So, is that good? Maybe. But this is after hitting the record of 413,000 in June. Prices have fallen on a monthly basis since then. August decline was across broad price points and across broad regions. What is interesting, first-time home buyers accounted for nearly 30%, 29% of all transactions in August, matching July. But 72% of millennials have regrets. Check out that video if you haven't. So it is pretty wild. That's all I got for now. It's a short, sweet video. Smash the like if you haven't. Subscribe, please do. And I will see you in the next one.
Maybach music.